Okay, folks, another quick update for the S&P 500 and the NASDAQ. Now, the price has broken through this previous resistance we had up here at 69.10. Is there a potential retracing play in the short term? Now, looking at the S&P 500 first, we've got the price above the moving averages on the daily chart, and the CCI also is above the moving averages there. Now, it's broken up through this resistance, as I said, on the 69.10 level. But notice here we've got higher highs on the price, slightly higher highs on the price there on the price chart versus then that trend line, which we drew up previously. That new high, that's a lower high on the CCI, which is a bearish divergence. Now, in this case, if the price pulled back from where it is at the moment, we can expect a pullback. We take it back to the previous significant low before the divergence started. That'll probably be somewhere in that range there, because that's where the price broke below the moving average range. Now, as a pullback, we can expect a retrace somewhere in that level there. And that happens to be the 23-38% range of that Fibonacci range. We can expect a pullback, plus we've got these fair value gaps in those previous days of trade, which need to be filled, and they're still exposed on the daily. So I've got a daily bearish divergence on the daily. Also notice on the 1 hour chart, if you're trading on the 1 hour, you go in the direction of the daily basically, and this is where the back test would have worked, going long during this period, and you had a couple of trades there, and you'd be closing out your trades now because the moving average band is turning down. The CCI has already turned into a downtrend, so we might see a retrace in the near term on the market opens this week. Now, for the NASDAQ, likewise, we've got the price above the moving average band, and so is the CCI, and there is no divergence. That CCI is moving in tangent with that price, so there's no divergence currently on the daily. On the hourly, though, we do have bearish divergence, lower highs on the CCI versus the same period. At that point, higher highs on the price. Now, in this case, as a pullback, if we expect it to come back as a minimum, we expect it to break into that 23-38% range. Happens to be there as a minimum. At the moment, the CCI is turning down. The price can still rise, but notice the price is also broken below the moving average band in line with the CCI, so that's showing a slight bearish momentum at the moment. And also, if you're going long, you would have been going long according to the daily trend on about the 21st or 2nd of December, making those long trades. You'd be up a few $100s depending on the contract you're trading. But just be cautious at the moment. This could break down any time. The price is breaking down and CCI is already broken down. If you'd like to get some share trading ideas, we just posted a weekly bullish share scan this week. And this is these are the trades we've taken so far this month. This month it's returned 4.82% so far. If you annualize that's a pretty good return for the month. So to get access to that bullish share scan, subscribe to the Patreon page, links in the description below. Thanks for watching. Hit that like and subscribe button, and see you in our next update.